Hello everyone, welcome to VM Commerce. This is Meenakshi. Today we are going to see in this video 11th Standard Accountancy Unit 8 Bank Reconciliation Statement. So in this video we are going to see about the meaning of Bank Reconciliation Statement. A statement that reconciles the causes of difference between the balance as per bank column of cash book with the balance as per bank statement. This is called Bank Reconciliation Statement. Before getting into the meaning of BRS, we have to know about the meaning for reconcile. So reconcile means to bring an agreement between the two accounts. What is the meaning for agreement? Agreement between two accounts means the two accounts should match with each other. We could have seen in trial balance, the debit column and credit column should match with each other, should be equal. So that is an agreement between the two accounts. Then what is a reconciliation? That is, reconciliation is explaining the differences between the two financial records. So it explains the differences, the causes of differences between the two records. Here the two records means bank column of cash book and passbook balance. So these two records differences is written in this statement. Okay, so the causes of differences between these two records are entered in the statement is called BRS. Now, in simple, BRS means that every entry in the cash book matches with the bank statement. Of course, the bank column of cash book should be matched with bank statement. So the bank balance will be always same in both the records. When the balances do not agree with each other, there is a need arises to prepare a statement. This BRS. Okay, when the balances of these two accounts, two records are not agree with each other, we are going to prepare this statement. Then, so to know the procedure for preparation of BRS, we have to know what is that common factor between the business and bank, that is cash book and passbook. So the common factor is bank account. Bank account is the common factor between the business and bank. Business is a customer of the bank. He has opened an bank account in the bank. Okay, from the point of view of business, what is a bank account? First we are going to discuss about the point of view of business. So in the point of view of business, the bank account is an asset to the business. Okay, asset means it is the cash balance available at bank. Okay, the business is going to keep some cash balance in the bank account. So definitely it is an asset to the business. So cash book is prepared on the basis of that double entry system rule, that is debit what comes in, credit what goes out. So in the cash book, all the receipts are recorded in the debit side, all the payments are recorded in the credit side. So automatically cash book balance, debit balance is an increasing, that is favorable balance. So cash book balance, credit is decreasing, that is unfavorable balance. Okay, so you will know that previously cash book always shows debit balance. We know the rules. Okay, so when the asset is increasing, we are going to debit it. When the asset is decreasing, we are going to credit it, according to the business point of view. So business only preparing the cash book. So in the cash book rule, what is the rule? When the asset is increasing, we are going to debit. When the asset is decreasing, we are going to credit the balance. So when comes to bank point of view, so the bank, who is the banker? The banker is one who is storing the money of his customers. He is just storing the money of the customer. So it is an liability to the bank. So in the bank point of view, it is an liability. Why it is a liability? Whenever a customer in need of money, he is demanding money, means the bank has to pay the money. So the bank has to return the money to his customer. So the bank account, the bank balance of a customer is a liability to the bank. So when the liability comes, according to the passbook, in the previous video we have discussed the format of passbook. So all the withdrawals are entered in the debit column, all the deposits are entered in the credit column. So automatically in passbook, unfavorable balance is a debit balance. Okay, that is called as overdraft. Okay, overdraft of passbook is a debit balance. Then that credit balance is a favorable balance in the passbook. So deposits of the customers are recorded in the credit balance. So the cash book and passbook is the reverse one. So cash book debit balance is a favorable one. Passbook debit balance is a unfavorable one. Cash book credit balance is a unfavorable balance. Passbook credit balance is a favorable balance. Okay. So you should know this concept very clearly. You have to understand. So in the business point of view, bank balance is an asset. So when the asset is increasing, we are going to debit. When the asset is decreasing, we are going to credit. So in the bank point of view, the bank balance of a customer is a liability because they has to pay back the money to his customer whenever he is asking, he is demanding. So it is a liability, means when the liability increases, we are going to that is the banker has to go credit the balance. When the liability is decreasing, they are going to debit it. Okay, so in simple, you have to understand this box, this concept. Okay, cash book and passbook, that reverse concept. Okay, which one is favorable, which one is unfavorable. Then next, so in BRS we are having 4 cases, that is 4 format for preparing the BRS, 4 procedure we can take it as. That is, balance as per cash book is equal to, here I have written equal to overdraft as per passbook. That is, debit balance as per cash book is a favorable balance, balance as per cash book. So it is equal to overdraft as per passbook. Overdraft means that is unfavorable balance, negative balance, unfavorable balance, overdraft, everything is equal. So this is equal. The debit balances of cash book and passbook, we are going to get only one format. In the same way, balance as per passbook, that is favorable balance as per passbook, is equal to overdraft as per cash book, that is credit minus unfavorable balance. Okay, so when we know these 2 cases, 2 scenario for preparing the BRS, we can easily prepare all the 4 cases. Okay, so you have to understand the balance as per cash book equal to overdraft as per passbook. Okay, only one format. Then balance as per passbook is equal to overdraft as per cash book. So another format. Only 2 scenario for preparing the BRS. We have to understand this 2 cases. We can easily prepare all the 4 cases of BRS. Okay, now we are going to discuss about the first case of BRS. How we are going to prepare when they have given balance as per cash book or overdraft as per passbook. Both are equal only. So we are having only one format for these 2 cases. Okay, so we can take it as a first scenario for preparing the BRS. So balance as per cash book or overdraft as per passbook is given in the problem, means what items we are going to add with this and what are all the transactions we are going to less from this amount. Okay, so the BRS format is only particulars and 2 amount column. Very simple format. No date, no serial number, nothing is needed for preparing all these things. Simple one. Very simple. How it is simple? Just we are going to add some transactions and subtract some transactions. Okay, so the first format, balance as per cash book or overdraft as per passbook. Okay, what transactions we are going to add? The transactions which increase the balance as per passbook. Okay, balance as per cash book we have taken, we are going to compare with the bank statement, that is passbook. The balance which increase the value of passbook balance, that we are going to add. Then what we are going to subtract? The transactions which decrease the balance as per passbook. So which decreases the balance as per passbook, we are going to subtract. Which increases the balance as per passbook, we are going to add with this balance as per cash book. Okay, so I will explain what are all the transactions we are going to add and subtract. See, the first case of BRS, we are having this format. Okay, the same thing only. I have explained what are all the transactions we are going to add. That is, what are all the balances which increases the passbook. Okay, passbook value. So see, balance as per cash book or overdraft as per passbook. Same format only for both the cases. Okay, only 2 cases we are going to learn. That is 2 format for 4 cases. Okay, first the transactions which we are going to add, the value which increases the balances of passbook. Okay, so balance as per cash book we are taking means we have to make changes in the cash book. Okay, we are going to make changes in the cash book. Why we are making such changes? To match up with the passbook balance. Okay, the cash book balance should match up with the passbook balance. That is why we are going to make changes in the cash book according to the passbook balance. Okay, so first transaction is given, check issued but not yet presented. Okay, check issued means check paid by the customer, that is business. Check paid, payments made. Immediately after issuing the check, what will happen in the cash book? We are going to reduce the money. But in bank it is not presented. In bank the person is not presented the check. So in passbook the value is not reduced, it is increased. Okay, it is in increased state. So in cash book we are going to add. So balance as per cash book means we are going to make changes in the cash book, that is add or subtract in cash book. So this arrow mark in passbook, whether it is increases the balance or decreases the balance. Check issued not presented, immediately after issuing the check the cash book balance will go down. Okay, but in passbook it is not at all entered, the payment is not given by the banker, so the passbook balance will be in increased state. So we have to add this transactions. Next one, amount, excuse me, sorry. See, the next transactions, amount directly paid by the bank. Amount directly paid in the bank, that is the customer of a business may directly paid into the bank. Customers directly paid into the bank means the cash book is not entered that transactions. Only after seeing the passbook only they will know that customers are paid into the bank. The bank balance will be in an increased state. Okay, the customer was directly paid into the bank. So the cash book we are going to add this transactions. Then collections as per standing instructions. Collections as per standing instructions means on behalf of the business, on behalf of the customer, the bank is going to collect some amount. Okay, maybe interest, commission, rent, whatever may be, dividend received. So the collections made by the bank directly on behalf of the customer, first it will be entered in the passbook, so the balance will be in an increased state. In cash we have to add this transactions. Then wrong credit by the bank. See the fourth transactions, wrong credit by the bank. So the bank statement credit column means deposit column. Okay, so deposit means automatically the bank balance of a customer will be increasing, but it is an error by the banker. They have wrongly credited the amount, so the balance will be in an increased state in passbook. So to match up with the passbook, the cash book balance will also be added. Okay, so these are all the main transactions that we are going to add with the cash book balance. Okay, next for subtractor. Subtraction transactions, that is check deposited not yet credited. Check deposited means check received by a business. Okay, check received by the business. So receiving means automatically it will increase the balance of the cash book, but not yet credited in the bank. but in bank account passbook the amount was not yet credited. So in passbook the balance will be in a decreased state, so we have to subtract from the cash book. So why we are making changes in the cash book? To match up with the balance as per passbook. Okay, next one is dishonor of a check. So maybe the check deposited by the business may dishonor. So in that situation also cash book balance will be in an increased state. Passbook they may not be entered, they may not be credited. So passbook balance will be in a decreased state. So we have to subtract this amount. Then payments as per standing instructions, like collections as per standing instructions on behalf of the business, on behalf of the customer of the bank, the banker may pay some amount, for example insurance premium, interest on overdraft, whatever may be, then some salary paid, rent paid on behalf of the customer. This is a payments as per standing instructions. So automatically the bank balance will be in a decreased state. When the customer of that bank will enter in the cash book, they may be entered only after seeing the passbook, so they have to subtract this. Then wrong debit by the bank, like credit, the bank will also do some wrong debit. Debit means withdrawal column in the passbook, so that means it will be in a decreased state. So to match up with cash book balance should be subtracted. Okay, so this is the procedure format for the first case of BRS. When you are preparing the problems, you may easily understand this concept. Okay, by seeing continuously this video, you can easily able to understand the concept. When you know the concept, it is very easy for you to apply that in the solution. Then now we are moving to the second scenario, second case of BRS. So when we are learning the second case of BRS, automatically we have learned all the 4 cases of BRS. I told even though we are having 4 cases for preparing the BRS, only 2 scenario, 2 format is enough to prepare all these things. So second case of BRS is balance as per passbook is equal to overdraft as per cash book. Okay, so I have written balance as per passbook or overdraft as per cash book. What transactions we are going to add, what we are going to less. So it is a just opposite to the first case. Okay, what are all the items we have added, we are going to subtract in this format. What are all the transactions we have subtracted in the first case, we are going to add here. Okay, the simple difference between the first case and second case is here the add transactions is the transactions which increase the balance as per cash book. So balance as per cash book which increases will be added in the passbook. So the changes is going to happen in the passbook. Okay, so with the help of the banker is comparing the cash book. So the banker going to make changes in the passbook according to match up with the balance as per cash book. Okay, that less which transactions we are going to subtract? The transactions which decrease the balance as per cash book. Okay, so when we come to that format, you can easily understand. See, balance as per passbook, overdraft as per cash book. So we are going to make changes in the passbook, that is plus or minus symbol in passbook, increase or decrease symbol in cash book. Just reverse to the first format. In first case, what we did in cash book, we have did plus or minus, increase or decrease in passbook. It is here for the second case, it just opposite. In cash book we are going to write this arrow marks, passbook we are going to write the plus or minus symbol. Okay, balance as per passbook means the changes should be made in the passbook. See, just an opposite. Check deposited, not yet credited. The same thing, but that less transactions, the subtracted transactions are come into that add column. So add columns, all the transactions came in the less columns. Okay, so check deposited, not yet credited. We have to see in cash book whether it has increased the value or decreased the value. Check deposited means a check received by the business, so automatically it will be an increased balance in the cash book. So we are going to add this transactions in the passbook. Then dishonor of a check. So received a check dishonored by the bank, it is also increased state in cash book. Whenever we have received or deposited the check in the bank, the cash book, we are going to debit the balance. So passbook also we have to add this to match up with cash book balance. Next, third one, payments as per standing instructions. Payments as per standing instructions means first this items will be entered in the passbook. Okay, so cash book they may not be entered in the beginning. After seeing the passbook only they are going to enter. So this amount is not deducted in the cash book, so the amount will be in an increased state. So we have to add this in passbook balance. Then wrong debit by the bank. So the bank is wrongly debited the amount, but it is not given in the entered in the cash book. So in cash book it will not be reduced, it will be an increased state. So this balance also we are going to add in the passbook. Then subtraction, check issued but not yet presented. Check issued means check given by the business. Okay, check issued, immediately the cash book balance will go down, they will be decreasing in the cash book, but in passbook it is not yet recorded. That is, the check is not presented in the bank, so they didn't record that, so they have to subtract from the passbook. Then amount directly paid by the bank, that is the customer directly paid into the bank amount. So directly paid into the bank means the cash book may not be entered this transaction. First it will be entered in the passbook only. So the cash book balance will be in a decreased state. Passbook they have to minus. Then collections as per standing instructions. Passbook may be collected, that is banker is collecting the amount on behalf of the customer. First it was entered in the passbook only, so cash book it may not be recorded. So in cash book the balance will be in an decreased state. So we are going to subtract this transactions in the passbook. Then last one, wrong credit by the bank. Wrong credit means credit in the passbook means a deposits column only. So in passbook they will be increasing the balance, but in cash book it is not recorded. Okay, so wrong credit means this is also an decreased state in cash book, so we have to subtract in the passbook. Okay, so these two cases you have to know to prepare the BRS, bank reconciliation statement. Very simple thing only. So one format if you know means you will automatically come to an second format. Okay, just an opposite to the first case of BRS. Okay, so that's it. So two cases of BRS, if we know all the four cases, we can easily apply in that solution. Okay, so thank you.